Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to give you an update on the portfolio. Of course, as we always do at the end of the week, show you guys the buys we made, update the dividend tracker on trackyourdividends.com, and also update ShareSite, which is the performance of the whole portfolio. We're not going to really talk about much in this video, maybe answer some few questions that I got in the comment section, but that is pretty much it. So if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So the portfolio this week closing out at $13,622.06. Today, we are down a whopping $157.19, down 1.14%. It's kind of just been a rough week, I think. For the past week, we're down $375.48, down 2.68%. For the 1 month, we're up $155.19, up 1.15%. For the 3 months, we are down $295.93, down 2.13%. For the 1 year, up $173.43. That's it. That's it for the year. It's wild. And for the all, since starting this portfolio, up $1,366.20, up 11.15%. So you can see here, pretty much a red day. The only exception was TD, Toronto Dominion Bank, but we did make a purchase today, and that was on Bank of Nova Scotia. Bank of Nova Scotia, Bank in Canada, closed out this week at $74.80. Down 89 cents on the day, down 1.18% for the past day. We have 16 shares now because we did make a purchase. As we go down to the bottom here, we purchased 2 shares at a limit buy at $74.65 because that new buying power that they have on here, you got to have like at least 10 or 15% or whatever it is extra just in case the purchase doesn't go through. So I just did a limit buy, purchased 2 shares. This was filled today, August 26, 2022 at 9:16 a.m. for a total of $149.30. And as we always do every single week when we make a regular purchase of a company, excuse me, we purchase VFV, which closed out at $94.07, down $2.53, down 2.62%. We now have 8.9 shares in this one. Average price of getting in is $95.39. Holds about 6.16% of the portfolio. And we bought a fractional buy of $25, which gave us the amount of 0.2644 of a share. And so that is VFV, which is the Vanguard S&P 500 Index ETF. One of my favorites, of course, because it has such a low management expense ratio. If you don't know what that is, MER, that is what these companies will charge you to manage the fund for you. And this is the non-hedged version compared to VSP, I believe it is, which is the Canadian hedged version, which has a slightly higher MER, but because they use tools to hedge the Canadian dollar against the US dollar, which I did answer a question in the comment section about that in regards to VFV and VSP. And if something happened to the US dollar, well, of course, long-term, trends for currency will typically go back to where they're at in the longer term. I mean, the last time we were on par with them was like in the 2000s. Probably early 2000s, not early, like 2000, I want to say 2011 maybe. And a lot of people were just holding US currency instead of Canadian because it was on par. And then eventually it went back to regular amounts that everyone was used to. And some people made a ton of money. I remember a lot of people went down south and bought houses at that point because they were able to. Canadians would go down there, we call them snowbirds. They would go down there, buy some houses, and then a few years later, because of the currency, they were able to make quite a pretty coin on that. But that was a long time ago, and I don't think we've come close to being on par with them for quite some time now. I don't think we've even got to like the 90s. think we're sitting at like 0.73 cents on their dollar. So something like that. But anyways, not talking about currency today. We'll head over to Wealthsimple Trade. We're going to head over to trackyourdividends.com and update a few things here. As you can see here, this one is off, and I think it's the VFV, which is throwing things off here. Because on here, oh no, I don't know. I think it just rounds something off. But anyways, portfolio is $13,378. And portfolio yield, if you were to build the portfolio as it stands without the updated positions, you would get a yield of about 3.88%. For us, dollar cost averaging in, we are getting about 4.34% of a yield on cost because we do dollar cost averaging, which is DCA. And I got a good question in the comment section about yield on cost. Do I really think it matters? I personally do. And the reason why I say it does is because that's almost a full 0.5%. Yeah, literally 0.5% difference in yield. Now, if you do 0.5% in anything, it can be very, very large. It can equal out to quite a large sum of dollars. I mean, you look at the amount of mortgages, for example. Raising the basis points by 25 points literally knocks out, I think it's like on average, knocks out 50,000 potential home buyers and makes them become renters. Okay. We know that Bank of Canada does this stuff recently with raising interest rates, which is what they do, and it's normal. Well, not normal for what we're used to, but that's what they're designed to do. 25 basis points changes a lot when it comes to, let's think of mortgages. Let's not talk about, but let's think like variable rate mortgages. You can get to a point where there's something called the trigger rate in mortgages. And eventually the bank will be like, no, we can't. We only amortize up to 25 to 30 years if you have a 20% down in Canada. And if interest rates keep going up, those little 0.5% increments, 1 basis point, 100 basis points, like last rate increase, can eventually set your amortization, which is the full period of you being able to pay off that mortgage that you owe to the bank, could extend past the 25 years. It could end up being, I've heard of it going up to 50 years amortization, but eventually you hit what's called a trigger rate, and those little 25, 50 basis points increases change the amount of your principal payment and your interest payment. If they're blended, the amount, it shifts. So a lot of times these payments are stagnant or static, they call it. And if interest rates go up, you have less of that mortgage payment going to principal and more going to interest. So every time that increases, you'll start seeing that and eventually you hit a trigger rate. So do I think it's important? I think anything that is higher when it comes to investing, when it comes to yield on cost percentage wise, is very important. So hopefully that answers your question. Totally went on a tangent there. Totally sorry, but not. So anyways, our yield on cost is 4.34%, an annual income coming in at $520. Of course, divided quarterly. We'll go ahead and add the new holding. Ticker symbol for VFV is, of course, VFV.to. We purchased 0.2644, and we got it at a cost of $94.55. We'll go ahead and add that holding. Changes things not drastically, didn't change the annual income, but that's okay. And we'll go ahead and add Bank of Nova Scotia, which, if you don't know, is one of the 5 major banks in Canada, and one of the biggest paying dividends, I believe, still. Bank of Nova Scotia is not BS, it's BN, not BNB, BNS, and .to, because we are in Canada, and it's on the Toronto Stock Exchange. So 2 shares there at a cost of, I think it was $74.65. We'll go ahead and add that holding, and boom, as you can see, 3.9%. If you were to build the portfolio today, that would be roughly your yield, return on investment, ROI. And we are getting about 4.34%, and annual income has increased to $528, a whopping $8. which doesn't seem like much, but it definitely compounds over time as you hold. So as you can see here, Bank of Nova Scotia, which is at the top here, 16 of those shares, and price today was 74.80 is what it closed out at today. Change of 89 cents on the day. Average cost for us is $71.79. Profit of about $48 of stock appreciation. Your yield today, if you're to buy it, 5.51%. And our yield is 5.74%. And our annual income from Bank of Nova Scotia is $65.92, of course, divided quarterly. VFV coming in at 8.93 shares. And we're getting about $10 from VFV, divided quarterly, of course. And we are down on that position. So that is trackyourdividends.com, completely free for you to use. Now it's a bit, doesn't really update correctly as our numbers are a bit different, but that's okay. So we're missing something, but I'm okay with what it's doing. I just want to see really the dividend income. I'll probably go back through and see what we're missing here. But anyways, moving on to ShareSite. I've already updated this one. So this one tells you pretty much the same stuff, except it gives you a graph and tells you the performance, including dividends and currency gain, which is foreign exchange or Forex as you hold US stocks. So everything's updated on this one. Capital gains, we are down 7.02%. So we have dropped this week. This week was just kind of a bad week in the markets. Not sure why. But I'm not an economist, so couldn't tell you. But we're down 7.02%. Dividends, we've received about $271.18, about 1.87% there in the black. Currency gain, about $76.22 in the black, about 0.53%. And our total return with everything kind of added together, we are only down 4.63%. We are down more than we were last week, but that is all right. I get it. It's the market. And we still got pretty much the rest of the year to go. So that is pretty much it for today, guys. Gave you guys the update, but no fear in the market. Remember, just stay invested, in my honest opinion, because you don't want to miss the days. Usually typically when there's a bear market, it is followed by a bull market, and very quickly. Now, bear markets are just a bit more extreme, and that's why you feel it more and it's painful, and you don't experience it often. So just keep doing what you're doing. If you're continuing to invest in yourself, in your portfolio, and doing your due diligence. So other than that, guys, don't forget to leave a like and subscribe, and we'll definitely see you guys in the next one. Have a great weekend. Bye.